What's really good, people? Welcome back to the channel. Apologies for the delay. I've been having some audio technical difficulties with my microphone and headset today. So if I can't fix that, I'm gonna have to fork out for a new one because my one's just packed up. But that's why we got an emergency fund. Anyway, enough waffling. I'm gonna get straight into this. So yeah, I'm using my AirPods, so the sound is not gonna be as ideally as crisp as it should be. But yeah, apologies for that. In today's video, I'm going to talk about one dividend payment that I've received. I'm going to talk about Mega, Make England Great Again. I would say Mukga, Make the UK Great Again, but it don't really have the same ring to it. So Make England Great Again. Apologies for, Wales and them sides there. I'm going to talk about me selling another growth stock. I haven't actually sold it yet, but there is another growth stock that I am potentially looking to sell. So I'm going to give you my thoughts and feelings around that as well. So yeah, if you want to know more, please like, comment, subscribe. Help the channel get to 7K subscribers. Follow on Insta and Twitter at Infinite Investors. And I'm using the free trade app. My link will be in the description and the pinned comment, freetrade.io/infant-investors. Click on the link, sign up, deposit £1, and you will get a free share of up to £200. But let's get straight into the top movers. The first top mover to talk about is always making dough, AMD. Now, as a few weeks ago, I'm going to be quoting a few different percentages just because the free trade percentage is not tallying up to percentages I'm seeing elsewhere, which seem to be a bit more aligned. So the percentage that I'm going to quote to you is 6.76% or 6.8%. This is from Trading 212 and Simply Wall Street. And that's how much it's gone up this week. Now, there's not been any specific product related news or business related news that's made AMD's share price go up this week. I think it's a combination of factors that we saw that AMD has been quite heavily dampened over the past like 2-3 months. We spoke about that a bit last week and how manufacturing is obviously reintroduced, and people are more bullish for it for the latter half of this year. So I think that's a few positive factors that sort of happened this week. But there has been some interesting articles about balance sheet, and so there's certain things that I sort of look for that I want to sort of pick out and talk about, which I think are positive in factors when you're looking at AMD's balance sheet and their financials and their fundamentals as to why they're potentially a good long-term stock to hold, and arguably one of the, I want to say, safest high growth tech stock. I don't know if that's a bit of an oxymoron, but I would say, there's a lot less risk with AMD versus some other potential tech stocks. But, their current assets has increased from 2.5 billion to 4.6 billion over the past couple of years. Their long-term debt has fallen from 1.4 billion to just 486 million. That was from 2016 to 2019. So we're seeing their long-term debt has reduced while their assets have increased. From 2016 to 2018, their free cash flow increased from 13 million to 45 million and then to 129 million. That figure now in 2019 is 276 million. And over the trailing 12 months, so from this point back 12 months, their free cash flow is 431 million. I don't think we've spoken about free cash flow on this channel too much. So just to give you a brief snapshot on what free cash flow is and why it's important, if you basically take the operating cash flow that a company generates, so basically the revenue that they generate, minus their capex and minus what they spend on capital expenditure, such as, I don't know, machinery, etc., that is basically free cash flow. And the higher free cash flow means they've got more cash to effectively do more things, such as expand the business or, bring in a new product to market, etc., etc. So having positive free cash flow and having that increase is very important for many businesses, particularly growth stocks whose whole aim and ambition is to grow and to drive, greater returns for shareholders and investors. So I think AMD for me is, like I say, one of the safer long-term tech stocks, which means it probably is going to have more of a modest journey. And I would definitely counteract to say that, just being a bit more fair, there's probably other tech stocks in the semiconductor space, which is in AMD's sort of industry, and just tech stocks generally that you might get higher or greater returns. But I'm definitely happy to keep holding AMD for, the medium term, and we shall see what happens there. The next stock to talk about is Uber. So Uber has gone up. It says 1.91, but everywhere else it says 8.02 to 8.12%, that it's gone up this week. Now, There's two things that I've noticed about Uber this week, which I think is quite poignant. The first thing is that they are rolling out their pilot program for drivers to set their own rate. So when they're sort of surge pricing, typically it's automated pricing, and a driver can't define what rates they basically charge for when they pick up riders. It's preset for them. Now what they're piloting, I believe in San Fran and a few other states in America, is that during those busy periods, drivers will be able to set their rates. So if they want to reduce their rates rather than take the surge pricing rates in order to get more revenue, in order to get more rides, then they're able to potentially do that. And that can also benefit the driver. Even if they potentially take on more rides at a slightly less rate, they might actually get a lot more tips, because that tends to happen quite a lot, and the tip revenue is increasing for riders. So I think that product enhancement will give a lot more flexibility, and it might actually stimulate the rider economy. The same thing that was mentioned as well is that, we saw how much during the whole COVID pandemic situation that riding business within Uber has significantly tanked across Lyft, across other places, other businesses as well. But Uber obviously had, a significant downfall. I think they got rid of 30% of their staff globally. Their revenues is obviously completely shut up because of it. One thing that Uber's basically announced is obviously a surge in their food business, and what they forecast is that I think by the end of this year that the riding business will only make up 50% of their general revenues and profits going forward. But there are other services that they're going to be providing will be equally another 50%. Now, you can look at that two ways, but I do see it as slightly a positive, and I think the market has reacted to that quite positively, because you don't want to have an over reliance and an over dependency on one business unit for your business to survive. You want to, it's effectively like having a stock, right? Having a stock market portfolio. We talk about diversification. Imagine if you look at Uber's portfolio as like stocks, it's like saying they only have one stock if their rider business is basically their main revenue driver. And if that goes down for whatever reason, such as what we've seen this year, then they've got no other way to make money. So you want to have two, three, four other really strong units as well. And I think that just is common sense for any business that really wants to be, global. So I think it's a positive thing, and it'll be interesting to see how those other business units actually start to increase towards the latter end of this year, and then obviously 2021 and beyond. So yeah, that's the reasons why, I personally believe that Uber's gone up about 8% this week, which has been extremely positive. The last one to talk about is Barratt Development. Barratt Development has gone up 11.8% or 10.8% according to those other two sources. And there's been quite a few reasons why Barratt, I think, has shot up this week. So one of the first reasons I will quote to you is that Barratt have announced that they're going to be repaying back the 25 million that they claimed through the government furlough assistance. They basically said that they're in a good financial position, their balance sheets are good, and they're in a position now to pay that money back, which has given a lot of investors, particularly one specific investor, which I'm going to talk about in a bit, a lot more confidence about why they're bullish on Barratt. All of their staff are basically returning to work, except ones that don't have to, which then means construction is back up and running again. And if construction is back up and running again, then you would expect more houses to effectively be delivered on time, and therefore ordered over the next coming years. So their order book should effectively fill up from that point onwards. We're seeing as well that RBC, so that specific investor is RBC Capital Markets. They've basically bought a whole bunch of shares in Barratt this week, which I think would obviously be one of the primary reasons, but that was the rationale for one of their reasons. And now they own about 2.9% of all of the shares. So, it's a significant institutional backing, a significant institutional investment into Barratt, which I think has obviously had quite a big impact on the share price. And obviously, if more other businesses or retail investors follow suit, then you can see Barratt's share price going back to its original highs of, around the £6 mark, or, it was at £8 before the pandemic. But, if it even can get to like around, the £7 to £6 mark, then that would be even in positive territory, I believe, for me. I can't remember actually what's my average share. We can just go find out. Yeah, £5.84 is my average share price. If it goes into £6, I'm back in profit. So it's not that long before it gets there. So I want to talk a bit about why I bought more Barratt shares anyway, but that's partly it. The other reason as well is, Mr. Rishi Sunak and, his Make England Great Again stuff. And one of the things he's doing is obviously the government's stamp duty holiday, which, if you ever bought a crib, like stamp duty is just a bump. So it is a good initiative to get the housing market stimulated and getting people buying. And obviously that stamp duty holiday for the next 6 months is going to be hopefully, I think, well received. It seems like it's been well received from a sort of a social level, but we see if that will actually translate into more sales and a real stimulation into the housing market. But I think those combination of factors for me is the reason why Barratt has been my top stock this week, and obviously it's gone up, about 11% this week, which I think is really positive. Now, on to the stuff that's not so positive. The first one to talk about, we're going to move over to the basic side, is British land. Now, British Land has, sorry, wrong portfolio there. British Land has gone down 6.01%. I'm not even going to bother look at it where it's on other sources if it's worse. I don't want to be hurt this weekend. So it's gone down 6.01% according to Free Trade. And yeah, British Land, there's a couple of reasons. So one of the reasons is that they announced that they just collected only 36% of their retail rent for the June quarter. So for the second quarter, which is obviously, a third of the rent, sorry, yeah, one third of the rent that they should effectively be collecting. They've basically given about £3 million in rent waivers to small retailers, food and drink operators, and many of their larger tenants are kind of going towards monthly rent. So it means that they can't guarantee they can pay the quarterly rent or the half monthly rent or some of them annual rent, you know, in time and upfront and drop that amount of cash. So they're going to monthly rent, which means that their revenues as a business is going to obviously trickle through, which obviously for them is not that great. So I think that's a significant reason. But hopefully, with the economy being stimulated a bit more, we might see that this start to change and bottom out. But not too sure. Sticking on the basic side, Landsec has gone down 6.19%. Landsec was obviously one of the top movers last week, which just kind of this curve here, and that was because um, they announced their dividend that they're going to be paying out back in November. But I still think that the pressure of, the rental payments, I think Landsec is slightly higher, the amount of rental payments they've received. And obviously we've seen the shops and so forth open up this week. But still, I think the whole pressure of, will they actually get enough revenue and rental payments this week has been quite important for it. And I think just general direction of the market is kind of putting this pressure on Landsec. So yeah, there was some positive news, which you saw that curve up last week. But I think this trend is still downwards overall, and I think it'll be. We'll have to see what happens. We'll have to see what happens. It's going to be volatile, but I think potentially they will sort of come back into the fray. The last stock, if I go back to the ISA, that is the top faller of this week is Imperial Brands. Listen, I don't know what to do with this stock, man. This stock just hurts my feelings. Like, when you just got like someone that just, no matter what they do, they just keep disappointing you, man. This is what Imperial Brands is doing to me. So week after week it's disappointing me, and now it's at 7.80% down this week. And again, I don't really know why, if I'll be honest with you. I'm not going to sit here and make something up. I can't really see anything specific that's making me see, why it's going down week after week, to be fair. If it originally was doing well during the corona period, and then it started to sort of tail off. But you would expect kind of pre and post corona, it should do well. It's sold off parts of its businesses, it's tried to diversify, it's doing more abroad. I don't really know. There's nothing major about regulation. So we saw previously why it's dropped so significant, over the course of the year was to do with like regulations and US vaping bans and so forth. So that's not even really happening at the moment. So it's pretty difficult to tell exactly why this week it's gone down. So I again think it's just a general trend of the stock, and I'm worried it might be going into junk stock territory. Who knows what's going to happen? Like, obviously, I bought it as an undervalued play, and it started to rise up when I bought it, and then it's just kind of been going down ever since. But yeah, we'll see what happens. We'll see what happens. I think it's definitely my highest candidate of something to sell, but I'm not really willing to take this 28% loss. And I know I've had some people in the comments last week that's like, sometimes you got to just take the L. I respect that. I understand. And sometimes you just got to cut your losses and take the L rather than keep chucking money at it. But or maybe you're talking about Aviva at the time. I can't really remember. But either way, it applies to Imperial Brands. At the moment, I'm just going to sit tight, see what happens. Probably dollar cost average it and see if it actually starts to take a turn upwards. Because if I've held it for this long and then I sell it, and then in 6 months' time to a year's time, it's gone back up to, like, I don't know, 15, 16, 17 pounds. It's going to be peak buff. Like, someone's going to have to get the smoke. No pun intended. Now, I'm gonna talk about Mr. Rishi Sunak. So, for those of you who don't know who Rishi Sunak is obviously the Chancellor of the Exchequer that came in not too long ago, following Sajid Javid's departure, and he's been the guy responsible for stimulating the UK economy. When it comes to, obviously, all parts of the economy. Obviously, now, there was an announcement that was made to the Houses of Parliament this week, or the Houses of Commons, which one I can't remember, which basically talks, or maybe it's the same thing, I don't know, basically talking about all of the different things that we're planning, or he's planning rather, to sort of do to help again re-stimulate the economy. And it talks about, obviously, the furlough scheme ending. He talks about a kickstart scheme, which is basically going to be an initial 2 billion to help fund thousands of jobs. It's basically going to be the government paying wages for people to be working. I think for young employees to be working, actually, rather than the companies paying as well. It talks about training and jobs, apprenticeship schemes. It talks about green investment. It talked about stamp duty, which I mentioned, which the threshold for stamp duty is going to increase from 125 to 500,000 now. I think the average UK price being sold is about £450,000. So it does mean that a lot of the UK is going to benefit from that if you are looking to buy a property over the next 6 months. What I personally feel, though, is that people that are selling is going to try and raise the price slightly to accommodate, knowing that people are getting that stamp duty discount. So I think not everyone's going to potentially see that benefit, because it depends on what the sellers have to do to mark up their prices, and it depends on the demand that they get as well. But obviously, it can potentially benefit quite a few people. It talks about VAT cut for all hospitality sectors, discounts for eating out. So you can go to a website and then basically can get up to a 50% maximum £10 discount on eating out, in order for people to eat out at restaurants a lot more. So yeah, he's doing bits, man. He's doing a lot to basically stimulate the economy, and what I call mega, make England great again. And I'm just going to touch on the VAT thing. I think the VAT is quite important for the hospitality sectors, because they were obviously most largely affected. And I think a lot of people, a lot of you guys, talk about hospitality stocks that you do have and that you hold, whether it's hoteliers, whether it's cruise liners or whatever. I don't know if they're included, but potentially we shall see. Obviously, flights and borders have opened up now, so the travel sector is going to start increasing slightly. So we might start to see this economy sort of get a bit of a jump start. I'm not saying it's going to be, all straight line upwards from here on in. I still think there's going to be some more difficult announcements and headlines coming out over the next, like, month or so, when it talks about the next GDP performance, but it might help do that. The whole stamp duty piece, I think, is a big one. Again, we just talked about how it could potentially positively impact any housing stocks, any housing ETFs that you might hold, any property stocks, any house building stocks, whatever type of stocks related to the housing market, REITs, etc. It might benefit those, but again, I think it's gonna you'll see the benefit over the long term, or maybe the short term 6 month period sort of thing. But I don't know if you're going to see the benefit, within, like, the next couple of weeks or so. And I think the Kickstarter thing is quite important, because obviously if you get more people working, then obviously you get more tax being generated. More tax being generated means it can be reinvested back into the economy, or potentially paying down some of the debt that the UK probably has got themselves even deeper or further into. So that again is a potential benefit to stimulating the UK economy, and it's one of the reasons why I've put some more money into UK stocks. So this week I basically put 1,000 into Lloyd's, 1,000 into Barratt, and then whatever kind of change, just to round up what I had in my account, into Aviva. Now, normally I talk about putting money into these stocks as an averaging down play, but these two specifically weren't for averaging down. These two are stocks that I've maintained and professed that I've wanted to hold, and I will continue to hold well into the future. To once they start obviously paying back those dividends, hopefully I'll be having a lot more shares in them, and we'll go back to seeing the capital gain return. And I just remind you, like, Barratt was my highest performing stock in 2019. I think I made like 65%, and that was with averaging up. So that's buying shares on the way up, and I still managed to get 65%. So I know that when the UK economy is back up and running, that I do believe that that stock that I specifically hold, being Barratt, is a good stock. So that's why I'm just going to take this as an opportunity to sort of get it at lower prices. With Lloyd's, we talked about Lloyd's in great detail. I'm not going to get into too much details on Lloyd's, but again, I still think that once they start to announce their dividends with the amount of institutional investment that they've got and how much institutions rely and pension companies and so forth rely on the dividend payments from Lloyd's, I just think that once they re-announce that they'll be paying their dividends and that time comes, we're going to see a big spike, and I think the patience will be rewarded. So I'm just basically going to hold on to that, and we'll see what comes of it. Now, if I stay on the screen, you can see that I received a dividend payment, and that's from Imperial Brands, and that was about £27.10, which is the least they can do for just ripping up my capital gain return. But obviously, it doesn't go any which way into really ensuring or protecting the capital gain losses that I'm taking with Imperial Brands at the moment. So, it's potentially something that it's not potentially. I think Imperial Brands has had its day. I think I've given it its time, but I'm not willing to sell it now. I'm just gonna have to wait and see what happens. But it's definitely one of the candidates that will be leaving the portfolio, and I'll put that money elsewhere. And something else that I might consider selling, but obviously for a positive reason, is Okta. So this week, Okta, and just before that curve, you can see Okta was about 22, yeah, 222 in terms of their share price. So at the point it was 222, my return was about 98%. So I thought it might creep into 100% this week, but it just sort of tailed off. I think the whole kind of S&P tailed off really towards the end of Friday and so forth. But we'll see what happens for it next week. I still think there's a strong trend line upwards, as you can basically see. And there's a minor pullback, but it's going to go back upwards again. But I think Okta, if it hits the 100% mark, I think it's a candidate for me to sell. And again, it's not that anything is specifically wrong with Okta. I just think it's time to potentially take your profits and reinvest into something else. Obviously, I held it since December. And yeah, I think it's just a profit taking strategy for me. Doesn't mean that I won't reinvest into Okta. I will look into their fundamentals. Obviously, they're not a profitable business. There will be a time when they start to, become more profitable. And maybe it might be premature, but I think once it starts to hit the 100 to 105% profit mark, which I do believe is going to happen next week, or at least I'm hoping it's going to happen next week, then I'm going to review it. And I'm going to review their fundamentals. I'm going to review their balance sheet. I'm going to review their products and services. I'm going to review what's going to happen, what I think their outlook is for the future. I'm going to review broker notes. I'm going to review price targets, estimates, and so forth. I'm going to review their ratios. I'm going to review everything about them. And if I feel that I might be at the peak of my returns, then it's a candidate that I might sell. But if I feel that there's actually a lot more growth within Okta, then I'll just probably hold it, to be fair, and just ride that out and see if it gets to the 200% like Shopify did, which I think will be a bit of a tall order this year for that. But we shall see. Anyway, I'm gonna cut the video there. Hopefully you found it useful. If you did, like, comment, subscribe, and I will catch you next time. Hopefully with a better sounding investment video. I'll catch you guys later. Take care. Enjoy your weekend. Peace.